Hello everybody, welcome to this week's live stream. I didn't do one last week, I was ill last week, but we're back to normal this week. Although I do have to wrap it up pretty soon after 3 o'clock today, because there's something I need to do. So we won't be able to go into as much depth on stuff from the audience, as it were, but we will, as usual, spend the time going through the markets. But if there is anything you want looking at, just pop it in the chat. And I'll try and cover it if we've got time. So let's just get the stuff out of the way. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 78.79% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Right, quick look ahead to next week. Two major things I picked out for next week. I mean, clearly, you know, Russia's invasion of Ukraine is still probably the dominant thing that markets are watching. There was a bit of a rally, a short rally on Wednesday of this week before we had the Fed, where there was talk that progress was being made on the peace side, but there's been very little reporting of that in the last couple of days. So I think that has taken a bit of a back seat. So clearly the ongoing war there is still at the front of traders' minds. But next week we've got interest rate decision from China on Monday. Clearly interest rates big theme at the moment. We'll talk about the US rate decision we had this week. And on Wednesday we've got UK inflation. How out of control is inflation in the UK? We know that in the States, in the US, inflation is at a 4-decade high. So next week we'll find out more about the UK inflation. As usual, to find out more, go to the website, Capital.com. Any questions, drop me an email, david.jones@capital.com. On Twitter, I'm at JonesTheMarkets. To find out more about me and the training course I run is jonesthemarkets.com. And follow us on YouTube, Twitter and Facebook. We've got a video going up next week. I recorded it this week with Peter Schiff, who some of you might know, fairly well known in the States, big gold bug, and not a fan of Bitcoin. We did a debate with him this week, and he's got some interesting ideas about what he sees as an upcoming market crash and what it could mean for the likes of gold. He actually says that he thinks that gold could go up tenfold. So you need to see it in the context of the video. But if you're subscribed, that video will be out on the channel the middle of next week. So I think that could be an interesting one to watch. Anyway, let's get into it. Let's take a look at the markets. So this week, of course, ongoing Russia-Ukraine war, they're still a big driving factor. But we did have on Wednesday night the interest rate decision from the States. You know, I think the most widely anticipated interest rate rise for a very long time. I think most people would have been correct forecasting that. So we had US interest rates up by 0.25% on Wednesday night. So it wasn't really a surprise. This was the move in the market. It was weird. In the afternoon, this was the bump in the afternoon on the S&P, about 2 o'clock my time, on talks of that potential peace deal. Then it went a bit sideways. Then the interest rate decision came out. Market falls, bang, bang. And then we had this massive rally up in the S&P. So eventually, markets decided they like it. But as is often the case, the first move ended up being the wrong move. But that was this week's. There was no real surprise there. What I thought was interesting from that was in December, the Fed, the US Central Bank inflation estimate for the end of 2022 was 2.7%. They revised that this week to 4%. So in the space of 3 months, the central bank in the US has had to jack up its inflation forecast by 50%. You know, so I do think that central banks are continue to be wrong-footed about inflation, and who knows where this is going to go. But clearly, from a financial point of view, that's the big focus in markets at the moment. Let's take a look at the S&P as we're on it. I think this move is interesting. I did the video yesterday, did a quick video yesterday looking at oil, gold, and the S&P. So I got a trade on gold anyway from earlier in the week. That's in profit. It's about £50 up. I did the oil trade yesterday, which was actually quite fortunate timing. Bought it yesterday morning at 97.30, and the market's at 102 now. So that made 130. But I also went short the S&P, and that's losing 165 at the moment. Went short the S&P in yesterday's video. And I think it's really interesting what's happened here, because we've seen lots of rallies this year for stock market indices, but ultimately they've run out of steam. Is this one any different? I think we're breaking this trend line that's been in place since pretty much the beginning of January, so a couple of months, 2.5 months on the S&P. So I think this makes for a very interesting day today in the US and also next week. So for me, the level I'm watching is these old highs. 44.20 were the old highs from the beginning of March. I think let's call it 44.50. Let's round it up a bit. I think if the S&P can break through 44.50, then perhaps we're finally seeing the end of this downtrend or correction, whatever we want to call it. For me, I'd still be looking to go short at the moment, so I would be looking for this market to run out of steam, exactly how it has since the beginning of the year. That would be the trade for me. But if we see a strong finish today and some strength next week, let's see what happens. Saying all that, I did actually buy the DAX this morning. I did. So I do think stock markets are going to roll over. But I did buy the DAX this morning. It fell off through this. Hang on, where is it? Through the low of yesterday, and I bought it, and I thought maybe we'll get a bounce. But we'll come to that in a second. But I think, stock markets are interesting up here because it has had a good couple of days. What are my charts doing now? I had a power cut about 10 minutes before I was due to start today. So I thought, that's it, it's not going to happen. The power came back on. I don't need my charts to not work for me. Oh, this is really annoying, isn't it? There we go. There we go, it's back. So let's see what happens with the S&P today. But I think it's interesting. It's interesting, that break. If we take a look at the Nasdaq, I'm sure we're going to see similar sort of moves in the Nasdaq. There we go. Same thing in the Nasdaq. So the Nasdaq, if I drew that trend line like that, the Nasdaq's actually broken this year's downtrend just the last couple of days. So that's interesting. For me, the level to watch, 14,400. If it can move through there, I do think that perhaps we are finally seeing, after the last few months, a bit of a shift in sentiment for stocks. I would just be wary it's going to run out of steam again. That's what I think. So let's see. So I think it's going to be an interesting couple of days for those. Let's bring things over and have a look at the UK, the FTSE 100. That was a nice little opportunity down there at 6.8 in the FTSE. I'm sure I must have highlighted that in a recent live stream because it's such a big level. Look at that, going back to May 2021. And it did sort of spike through it, but we've seen a, 400-point move, 500-point move, and a bit more off that level for the FTSE. So, again, a good performance. I'd probably rather wait and see if I could buy a dip on the FTSE, but it's interesting that 6,800 level held on the FTSE. Let's take a look at the DAX, then we'll have a look at some of the other markets. There's the DAX. DAX also, the DAX has been a bit of a funny market in the past, 8 months or so, because it wasn't really moving higher last year when everything else was. Absolutely fell off a cliff, but it's bounced back pretty sharply. So for me, it is all about US markets today, I think, when it comes to stocks. Let's see, where do they finish? Do we break out properly? Do we take out the early March high and then things start to look a bit more bullish? Let's see what happens. I would just be a bit nervous that we're going to see some of the recent exuberance run out of steam. But an interesting couple of days. Let's take a look at oil. So oil, some crazy moves, as we all know, if you follow oil. Let's zoom in to the last, few months or so. So we had, clearly the invasion, the Russian invasion of Ukraine was here, I think, on the 24th of Feb. Lots of volatility. Oil spiked up to $100, pretty sideways, and then bang, we had this massive move up. Beginning of last week, it was at 126 a barrel. This is West Texas crude, obviously, and then this week it touched 92. I think it's going to go back up. I wonder. I bought it yesterday in the video we did yesterday. I bought it at 97. So for me, first of all, we've got lots of support for oil from 85 to 90. So I think that's a big area of support for the oil price. I think only if it starts breaking below there do we have to worry about a much deeper sell-off. So I do think the price of oil is going to go up. But I think it is going to be quite some time before we see $120 plus. Clearly that was, I think, speculative fury, shall we call it, from the end of Feb into early March. And I'm sure a lot of fingers will have been burnt buying, at 120 or above without a stop loss. So I'm still bullish on oil. I just don't expect it to be $20 higher. Famous last words from where we are now. So I'd still be a buyer on dips down to 90. But I think we've probably seeing a lot of that volatility go away for the oil price now. Let's see what happens. But, I think it will creep up a little bit from here. Natural gas. So we've got a couple of trades running on natural gas. You can see them here, 279 and 237 pounds so far. The cash, the natural gas cash market, we've not seen the same sort of crazy moves that we've seen in oil. But, I'm in the trades because the trend is up. Natural gas is trading pretty much where it was 6 weeks ago. So it's actually a little, not that most exciting market in the world. So again, for me, would I buy it here? Probably not. I'd rather buy a dip if we got a dip back down to 4. I think that looks quite interesting. Let me just put some stop losses on those natural gas trades because I just worry a bit that it's going to come falling off a cliff a bit. Okay, I got the stops at 4. Let's put them at 4.5 because it just looks a bit uneventful. Let's put those in. So not too exciting natural gas, the cash market, but the bigger trend is still up. I'd still be a buyer on weakness and perhaps not really a buyer up here. Let's have a look at gold. Let's look at gold and silver. So I did the video earlier this week on gold. There's the trade. So I left an order. I think when I did the video on Monday, you can see it on the channel. Gold was trading at 1,960. I thought it was a buy, but not up there. I left an order in at 1,920. That order got filled. So that's where I am on gold. So I'm long gold. And I think a bit like oil, there's the invasion day where gold went as high as 1,975 and then came all the way back down and more over the next 24 hours and then pushes up to 2,070. I think it's quite telling that gold could not take out the all-time high. So we're on the verge of World War III without, I think, over-dramatising it, and gold can't break through its 2020 high. So to me, I don't think we're going to see gold above 2,100 personally in the short term, but in the short to medium term. But in the short term, for me, it was an interesting trade. It was a buy. The trend from August last year is still up on the hourly charts. The trend was up, so I bought in whenever it was. So I got filled on the way down at 1920. So got filled here, and I think it's an interesting trade. So for me, going into next week from a short-term trading point of view, I would still be a buyer of gold on dips. The absolute closest I'd have my stop. I think this is quite an interesting level. This was the invasion, the day of the invasion, and then gold sells off to 1880, and then eventually it has a big move, and moves $200, so moves more than 10%, and then it sells off again. So I think this 1880 is quite a big platform for gold. So I'd still be quite happy to be a buyer on dips to there. And I think if it starts to lose 1880, then we just drift back, into the range from perhaps the beginning of the year down at the low 1800s. But for now, I think perhaps the sell-off has brought in some more buyers over the last couple of days. So perhaps we'll see it squeak a bit higher because, of course, we still have high inflation. Who knows where inflation is going to go? We've still got geopolitical uncertainty because of Russia's actions. So, there's definitely an argument for being a buyer of gold. Silver. I don't know what's happening with silver. I've not looked at silver. I did have some trades on silver, and I think I've come out of them all. I think I closed them all. Yeah, there's an order left there at $23.80. So for me, there's a bit too many lines going on there, isn't it? Let's try and tidy that up. Yeah, silver. When I talked about it last year, it was a really disappointing market all the way last year. It would rally, but it would eventually run out of steam. And I wonder if we're seeing the same thing happening again with silver. Absolutely great run from the February lows at 22. Trades up to nearly 27. That's a big move. It's like a 20% move, isn't it, for silver in about a month? And I wonder now if it's going to drift back down again, silver. So I think it's interesting. I think that's actually an interesting market to watch next week. So for me, I haven't got... my charts are messing up again. I haven't got a trade on. But I think if it came under some pressure... Let me try and get these hourlies up. Every Friday this happens. Not every Friday, but whenever I do a live stream, the charts decide to go on a bit of a loop. Hang on a second. Let me just send someone a message that the charts are playing up, or my charts are playing up anyway, and see if they can fix it. So for me, for silver, I think for next week, 24 to 24.50 is interesting. If you really fancy trying to buy a dip in silver next week, that looks interesting, an interesting area, I think. So for me, but I wonder if we're going to see silver just drift off really from here now. So let's see what happens. Right, what are we going to look at next? We've done gold and silver, did oil, stock indices, currencies. I think there's a trade at the moment. There's a trade, I think. I was going to do one this afternoon, actually, when I finish this, in the dollar index. So we'll start with the dollar index first of all, then we'll look at the pound, then we'll look at the euro. But the dollar index, I always say this, great market to watch, because if you can see the description down here, it's a benchmark, it's a basket made up of the euro, the yen, the pound, the Canadian dollar, the Swedish krona, the Swiss franc, and blah, 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 blah. So it's a real good blend. Long term, the trend on the US dollar index, I can't get the data again, has been up since May last year. So I am absolutely still a buyer on dips from a medium term point of view. But I wonder, we've seen a bit of strength this week after the inflation. But I was just wondering if this move here, are we just going to see the dollar weaken again next week? Because it's come a long way, over... There we go. There we go. That's back to May last year. So that's the trend from May last year. And that trend is undoubtedly up. It's just had quite a good run since Feb. It's been something of a safe haven type asset. And I just wonder if we're going to see the dollar perhaps drift a little bit from here. I'd definitely be looking to be a buyer again into this trend. But perhaps up here it's a bit overextended. I don't know. We'll see. We'll see what happens. But if we take a look at the euro, I've got a trade on the euro. I'm short the euro, aren't I? I forgot I've got this short trade on the euro from, it's done really well, that. It's from the 10th of February. So I went short at 114.35 and the market's 110 at the moment. The stop's at 112. That was really good trade. It was a textbook trade, that one. If we take a look at it, and it was really just going with the trends on the euro. Arguably, this does go against my selling the dollar trade here, actually. I suppose arguably you could sell the euro here, couldn't you? It's interesting. It's really interesting. The textbook trade would be to be a seller of euro dollar up here. Let's take a look on the hourlies. Let's have a look at that trend. There we go. So we've got our trend coming down from wherever it is, from February. So we're about a month and a bit, 5 weeks into that trend. So for me, I would rather probably wait. I think it'd be an interesting one on Monday. Does it push back up and run out of steam at 111? And we've got obvious place for a stop up above 111.50. So I think that's quite interesting to watch next week if we see the euro against the dollar break out of its downtrend. But I think it's starting to look perhaps a little bit vulnerable again on that. Pound against the dollar. So we had the interest rate decision yesterday, didn't we, from the Bank of England? Again, no surprises. The Bank of England raised rates. I must admit, I find it quite hard to trade the pound against the dollar at the moment. I haven't done a trade for months and months and months. I found it much easier when it was doing this and it was trending. You know, we do have a downtrend, I'd argue, from up here. Where it is now, it looks, it feels a bit overextended from that downtrend. So maybe we'd get a bit of a rally from the pound from here, I suppose. You know, an aggressive trade, if you wanted to do it, would be to be a buyer with a stop under 130. I'd personally rather wait and see if it rallied up to here and look to sell short. But yeah, a bit overextended. So I think the dollar is overextended to the upside. The pound is overextended to the downside. I just wonder if we'll see a bit of pound strength, a bit of dollar weakness before these bigger trends reassert themselves. So that's, should we have a look at the cryptos? We did let natural gas. I just saw someone put natural gas in the chat. So we did do that. I'm going to have to say this quietly. I actually bought Bitcoin this week. Can't believe it. With all my hatred of the crazy markets of crypto, I bought Bitcoin. I can't remember where I bought it. 40 or 41 or something. I just wonder if it's going to see a base down here. I mean, clearly in the UK, I can't trade leveraged cryptocurrencies. So I bought like a, whatever it is, not an actual thing using a wallet, but you can just buy it without using leverage. I just wonder if this old level, these old levels, 28,000 to 32,000, are proving to be a base for Bitcoin down here. The trend, the trend looks like it's over. So for me, I think it's interesting to see if it can perhaps gain a bit of ground from here. It's been pretty boring, I have to say, over the last 6 weeks or so. It's not been that exciting, to be honest. But I think if it starts to break below 32,000, you can see the market fall a lot harder. But for me, I thought it was interesting to see if it does start to build a base down here. Same for Ethereum, probably. Same sort of thing for Ethereum. Same old stuff, The trend has been down, bang, bang, bang. And a little bit boring, but perhaps we come out of that trend. I seem to see a lot less chat about cryptocurrency now in general. I really do think the reason I think these are terrible markets is because they suck people in because of the volatility. They suck in novices because of the volatility. So when they're moving, people are really talking about them. But when they go quiet, there seems to be very little interest. And you can see it's been a fairly quiet couple of months by the standards of Ethereum or the other one, Bitcoin. So let's see what happens. It's probably the kiss of death, me buying Bitcoin. It's probably going to drop 90% now. So let's see. But for me, interesting stuff to watch. I mean, for me, it is the S&P. It's just stock markets in general, right? It's because of this move that we're seeing this week. Look at that. We've had 4 candles on the row so far, all up. So is this the sign that the trend is ending, or is it just another dead cat bounce? So I think for me, they are probably the more interesting markets to watch at the moment. I mean, I'm a big fan, as you know anyway, if you attend a few of these, of trading the S&P. But and the Nasdaq, there's the Nasdaq as well. So for me, they're the ones to watch. Oil and gold, a lot of the volatility is gone, but I still think they look reasonably bullish. And the dollar index is probably my other one. So for me, I am wondering, after I've finished doing this today, is there a short trade in the dollar index just to try and pick up on this little trend that's been going for a few days now? We'll see what happens. So a bit of a mix of different things in there, but clearly everyone's still really watching what's going on with Ukraine and Russia. All right, let's have a quick look at some of the questions. I did say I've got to duck out. Good job I said that right. Duck out a little bit early. We'll just have a quick whiz through some of these. Copper. Let's have a look at that one, shall we? So the dailies on copper. I mean, I think I've said, haven't I? I've been in this copper trade for months, actually, in my own account. And it did trade up to 5, which is, it's got to be a 10-year plus high for copper. I think, if not an all-time high. I don't know what the all-time high is in copper. So for me, and this was a great opportunity in copper back in a few days ago. Pulls back to that trend line. So for me, I'm long copper. Happy to stay long copper and see if it can burst a lot higher from here. See what happens. But the big trend is up. If I was a buyer now, the absolute closest I would want my stop is the other side of the Feb low, around 4.4. So it's a really interesting market, and that trend is still up on copper. So let's see. Euro, New Zealand dollar. Euro, New Zealand. Why is it not? Oh, there we go. Euro, New Zealand dollar. Well, that's really absolutely. I think I remember looking at that the other week. I think on this live stream. I mean, it's absolutely just nosedive, doesn't it? Let's have a look. Let's see where we are. I mean, the trend, the big trend, had been down. It's actually, I would have got wrong-footed by this because it did look like it was coming out of that trend. I mean, if we took the big trend was something like that, wasn't it? And I'd have been watching it here and thinking, okay, here comes the euro recovery, and then bang, there goes the euro recovery. So for me, I think it's tricky. I think it's a tricky market to trade when if you're in the trade, it's great. We get a little bit of a dead cat bounce. For me, I think it's going down to 156 again, perhaps even lower. But where would you put your stop? It's so volatile. I would probably want my stop above these highs here, which is a long way away, 300 points away from maybe 300 points upside. It's not a great trade for me, but I think it's interesting, and it still looks pretty weak, is what I would say. What we take for that. I mean, look at that. It dropped. How much did it drop? It was what was it, 174 down to 156. So it lost 18. It's 10% fall in the euro's value against the Kiwi in about a month. So have a quick look at New Zealand dollar, US dollar. Have we just seen a load of New Zealand dollar strength for some reason? We've seen a bit. It has had a bit of a run, hasn't it? So this is New Zealand dollar, US dollar. It's a nice run since January. So the Kiwi has strengthened against the US dollar. Interesting to see if it starts to run out of steam though, where it did last time. So we've seen euro weakness and a bit of a double whammy. The euro was weak anyway, but a bit of a double whammy that the New Zealand dollar has had a bit of its moment in the sun for the last month, and that's, I think, part on the pressure. So that's an interesting chart. Platinum. Let's have a look at platinum. I think I've come out of my platinum trade. I did have it. No, I think I still might have it. Let's it's really interesting. All these palladiums. We'll have a look at palladium as well in a second, as we're on the subject of precious metals. So again, I had this platinum trade running forever. Well, relatively speaking, I think I had it since October last year. It'd been long platinum, and I was long because of that, because the thing had broken out of the downtrend. And I think I remember saying this last time round. Great opportunity here. Comes back yet again in December to the old lows, and then bang, races away. And it's been knocked back hard. And we'll have a look at palladium in a minute. It's taken even more of a knock. I would still be a buyer. Clearly everything's a bit distorted over the last month, because of the volatility we've seen. I would still be a buyer. A really aggressive stop would be underneath that low, the 15th of March low. I'd probably want it a bit wider down here. So for me, I'd still be looking for a recovery. The risk is that it just goes nowhere, I suppose, after the volatility. But I think platinum is an interesting one. And if we have a look at palladium, which went nuts, because again, I think a lot of palladium comes from Russia or Ukraine, doesn't it? I can't remember which one. I should know. But we had the move in palladium where it went from, it was around 2,300 in Feb, and it was 3,400 in March. So it was a 50% move in palladium, and we're back. And I just wonder, for now, I would be a buyer. I think, it's like an exaggerated version of what we've seen with the likes of gold, I think. And for me, it's come back. I'd be a buyer. I probably want my stop the other side of 2,200, 2,150. But I think it's interesting. These are interesting markets to watch, even though the volatility has gone out of them. So we looked at natural gas. Plug power. Let's have a look at plug power. Is that some sort of EV nonsense? what is it? Plug power, hydrogen fuel, turnkey, blah 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 blah. Turnkey solutions. Oh, it is interesting actually, isn't it? Plug power. Let's have a look at that. Let's have a look at the old thing. So big support holds at $18. I think it's maybe, I would say it's pushing it a bit to say it started an uptrend. It's trying to start an uptrend, isn't it? It's having a go, you know? So but it is interesting as to whether it's turned the corner. For me, if I was a buyer now, I'd need to have my stop the other side of 18. So it's going to be a wide stop. But, you know, if the thing claws its way back up to where it was in November, it's like $20 upside for $7 risk. So it's interesting. Definitely an interesting one, that the old plug power. See what happens. Euro Huff. Let's have a look at that. Euro against the Hungarian forint. Euro Huff. It's a bit nuts, this one, isn't it? I remember this one. Just get the crazy volatility, don't you? And it's hard, isn't it? I mean, for me, I wouldn't trade it because it's just too much in the middle. If it got knocked back towards 352 again, I think it's interesting. But if you really had to trade it, I'd be a buyer now with a stop the other side of 368. But yeah, a bit of a crazy old market, that one, isn't it? Let's do sterling yen, an old favourite from last year. Great, it was a great market last year, sterling yen for me. I don't think I've got any trades left in it now though. It's interesting actually. But, you know, we're in this range now. We had in the earlier part of last year a trend in sterling yen. But look at it now. This is the range since October last year. So 158 is a real problem for sterling yen. So that's the level to watch. So for me, if I was doing anything, I'd be waiting to go short, waiting for a bit of weakness to go short. Clearly, if it breaks 158, then things have changed. You know, it would be at its highest levels since 2016, so we'd be at like a near a 6-year high, but 158 still feels like a bit of a line in the sand, doesn't it, for sterling yen? So, but interesting though, interesting to watch up here. Coffee, I do have a coffee trade on. I don't think coffee has done that much in the last. No, it's weakened actually. So for me, I think I'm long, but I've got to stop in. I might get stopped out soon. I would be happy to just wait it out. You know, the big trend for me in coffee is up. I don't know if I'd want to be a buyer here. If I was a buyer here, I'd put my stop under 2, the lows from October last year. I mean, it has been absolute fantastic trends over time, all the way through last year. It's got a bit trickier, I think, this year. But I think it's always an interesting market. I would be definitely one to watch. But I'd want to see a bit more. I'd want to be a buyer, but I'd want to see it. I'd want to see it calm down a little. Cotton. Let's have a look. Cotton. I remember talking about cotton last year because just this inflation thing. You know, why these central banks thought inflation was going to be transitory, because everything was going up. You know, I remember we looked at cotton last year. All the commodities are going up. So, you know, I think clearly it's not going to be transitory. It's not going to just go away. If everything's got a lot more expensive, then inflation is going to stick around, isn't it? What do I know, though? So, there we go. Great trend in coffee, cotton, even. For me, what would I do now? I'd wait. I'd wait to see, do we get a breakout through 127, or do we get a bit of a dip? But absolutely, would still be a buy for me. You know, still be a buyer on dips in cotton, and it's been a great market, hasn't it? And another lovely trend, going right back to April 2020. So this is still carrying on its trend from the pandemic lows. Right, we looked at silver, we looked at gold, so I've got to wrap things up there. I did say at the beginning, unfortunately, I had to finish things a bit sharpish today, but lots to watch. Stock markets for me is the top one to watch. Is this a reversal? Let's see what happens. We might do a video on it next week, but we'll do the live stream next Friday as usual. To find out more, go to Capital.com. Any questions, drop me an email, david.jones@Capital.com. @JonesTheMarkets is Twitter, and JonesTheMarkets.com to find out a bit more about me. So I see someone's just asked, what's the difference between CFDs and spread bets? I'll answer that very quickly. Spread bets is something unique to UK residents. It is pretty much the same as the CFD. any gains are tax-free with spread bets. So for me, my own trading, all spread betting, because I'm a UK taxpayer. With CFDs, you have to pay tax on any profits. The plus side of CFDs, if you lose money, you can lose those losses to offset against any other capital gains. With spread betting, you can't offset your losses. But if you think you're going to be profitable with spread betting, you don't pay any taxes. So that's the headline difference between the two. We offer both. I think you've got to be a UK and maybe an Ireland client resident to have spread betting. Otherwise, you have CFDs. Right, there we go. That's it. We'll wrap things up there. Short